Hello, everybody, and welcome. I'm going to give everyone a second to get connected to audio before we get started. All right, so we got a couple people trying to connect to audio. We'll give it another minute or so. All right. Okay, we still have a few people joining, but for the sake of your time and mine, I'm going to go ahead and get us started today. Thank you guys so much for being here. If you've never attended one of these before, my name is Sarah Lorenzen, and I am an outreach specialist and a certified financial education instructor for Oklahoma Money Matters and Ready Set Repay, which are two outreach initiatives from the Oklahoma State Regents for Higher Education, the Oklahoma College Assistance Program. And that's a whole lot of words to basically say that I travel all around the state, 40 hours a week, talking to students and faculty and nonprofits and businesses about managing their money. This is a webinar that we started in 2020, the Make It Count webinar series. And every month on the third Tuesday, we do a different financial topic. I'm excited for this one. We talk about credit a lot, but we don't normally get really in the weeds about credit reports. So I'm excited to be able to kind of break this down for you because it can be kind of confusing. So before that, though, we have a lot of different people from a lot of different backgrounds who come to this webinar. So I know who I'm talking to. I'd like you guys to take a second to answer the poll I just launched. Let me know who you are. If you fall into that other category in the chat, please go ahead and let me know where you're here from. And my students, if you are here as a student, go ahead and in the chat, let me know what school you're representing. We had several of y'all signed up, so I want to definitely make sure to know who I've got here with me today. And I'll give y'all a second to do that. Awesome. So it looks like we've got quite a few college students in the chat today. I am excited to see y'all. We got some TCC representation. I'm glad to see you guys on the call today. I'm sure we've got some others too. They're just feeling a little shy, and that's all right. So let's go ahead and get into some norms. If you've been on one of these before, you know that these are something we do every time. And this is just so we make sure that you, me, and everybody who watches this recording afterwards can get the most out of this. So I am used to being in a classroom. I am used to seeing your beautiful faces. So if you're comfortable, or you can, please feel free to turn on your cameras so I can see your faces. If you can't, that is a-okay. I understand a lot of y'all are in your lunch hour, so you might be stuffing your faces and not want us to see that sushi you just ate. So that's a-okay too. I am going to ask for you to stay muted if you can. Not because I don't want you to talk to me, but because this is being recorded. I want to make sure there's as little background noise as possible. I do have a dog who is chilling here in the room with me, and I can't promise he won't bark. So I'm going to apologize in advance if he, hears a neighbor and starts going bonkers. But we're going to try to keep the background noise to a minimum. I do want you to definitely be interactive in that chat. I want you to make comments, ask questions, have conversations. A couple things. I am not a financial counselor. So while I am a certified educator, I am not a counselor. So I cannot give personalized financial advice. And it is still your money and your decision. So I'm just hoping to give you some tools to help it make it a little bit easier for you to navigate your own personal finances. And very importantly, I want to make sure when it comes to money, especially things like credit, Money is a hot button topic, and people tend to get really sensitive about their money, and that is okay. But we want to make sure that we are being respectful of each other in this space while we're talking about money, because everybody's experience with money is different. The way I was raised, single parent home, kind of low income with money is a lot different than maybe some of you were raised. And that is a-okay. We are all different, but let's just make sure to be respectful of each other's experiences. Okay, so the agenda for today, we are going to talk very briefly about the difference between credit score, and credit report. If you've never dealt with credit before, a lot of times these terms are used interchangeably, and it can get a little bit confusing. So we're going to make sure to hone in on what those three things mean and how they're different, so you can know going forward when you're talking, we can understand that verbiage. We're also going to talk about why it's important to understand what's on your credit report. Even if you are a hardcore follower of, say, like Dave Ramsey and not having any debt, that is a-okay. But it is still important to understand what is on your credit report, understand how that affects your buying ability if you do have to finance something at some point, and as well as how it can affect things that are not finance related, but are not directly related to financing things. We're going to talk about how you access your report. We're going to talk about what you're going to find there, the different things that you will see on your credit report. And then we're going to talk a little bit about what you do if you find information that's wrong, because believe it or not, that is a lot more common than it seems. So that being said, let's go ahead and get started. So first things first, what's the difference? Well, credit is your ability as a consumer to be able to obtain goods and services before you actually pay for it, with the understanding that you'll pay for it later. For example, you have to go and buy a new washer and dryer from Lowe's or Home Depot, right? It is the understanding that when you swipe that Lowe's card or you take out that loan, that you will be given those goods in order to start using them before you fully paid them off, with the understanding that as the months go on, however much you've agreed to, you will pay that amount off over time with interest. Your credit score, okay? Your credit score is a number based on your credit report, but it is between 300 and 850. It depicts a consumer's credit worthiness, meaning whether or not they can trust you to lend you money, that you will pay them back. In theory, the higher the score, the better you look to a potential lender. Now, that isn't always the case, and we'll talk about that, but that is the basic gist of it. So next, a credit report, the reason we're here today. It is a detailed breakdown, kind of like your report card, of an individual's credit history, provided by one of three major credit bureaus: Experian, Equifax, or TransUnion. And the information that is on there is used to create your credit score, which is kind of like your GPA if we're comparing it to what we see in school. All right, so let's talk real briefly about credit scores a little bit and how this factors in. So the most common, this is not the only scoring model, but the most common scoring model that you will see that is used by banks and lenders for cars or mortgages is going to be your FICO score, or what we call the Fair Isaac Corporation score. Your FICO score was created by the Fair Isaac Corporation, and it is just that. It is a number between 300 and 850. The closer to 300, the worse your score, the higher closer to 850, the better your score. And in theory, the higher your score, the lower interest you will have to pay when you do have to finance something, right? Because they see you as more trustworthy, so they will lend you the money with less interest. Now, of course, there's some factors in here with inflation, the economy, ways things go. But generally, people who have higher credit scores will save a lot of money over time when they do have to finance things, because they won't have to finance them on such high rates, right? That is factored by a couple of things. The first is your payment history. Do you pay your bills on time? right? This is going to have things like your credit cards, any collections you might have. Are you making at least the minimum payment on time every single time for the things that you have financed? Depending on where you live, sometimes landlords and things like that can also put your rent on your credit, but that depends on them, whether they want to report that to a credit bureau or not. But this tells us 35% of that FICO score is what, like, do you pay your bills on time, right? All right, so the next is going to be the amount you owe, your credit utilization, okay? That is a big word to basically say it is the amount you owe versus how much credit you have available. A good example of that is if you have $1,000 credit card and you spend $1,000 on that credit card, you now have 100% credit utilization. But if you kept that balance down below 30% or below, I just completely blanked what I was gonna say, down below $300, generally that will keep you down below 30%, which is kind of the ideal ratio if you are going to carry debt. Now, I always recommend that if you have credit cards, make sure you're paying them off in full every month and not spending more than you can afford to pay off in full every month. But if you do have to utilize your credit cards and carry a balance, make sure that it is less than 30%, or if it's over 30%, that you pay it off pretty quickly, because it will definitely affect your credit score. And it will show up on your credit report if you are going over your limits or things like that. Also, the length of your credit history. How long have you had credit? Have you had a credit card? You know, you're in your 30s, you've had a credit card since you were in college, you have good payment history on it. That's going to look really good. If you are a college student, you have no credit, you just moved out of mom and dad's house, you're trying to build your credit, that is going to be a factor in your credit history. Now, there's really not a whole lot of ways that you can boost this. There's a couple, but there's not a whole lot of ways that you can boost this. You just have to give it time and make sure that you are paying attention to the most important parts, the largest percentages, which is that payment history and that credit utilization, and making sure that you are not spending more than you can afford. New credit and inquiries. We'll talk about this in detail here in a little bit, but when people pull your credit, you open new accounts, they count negatively on your credit and they go on your credit report and can factor into that score. It makes it look like you're fishing for credit, which a lot of times doesn't look good to lenders. And then the last is your credit mix. This is the types of loans you have. You know, lenders don't necessarily want to lend to someone who has nothing but credit cards. They want to see that you can properly use different types of credit. So that being said, why does that matter? Okay, I get this a lot, especially because there are many, many people who follow, you know, kind of Dave Ramsey's no debt, pay for everything in cash, which is great. It's a fine strategy, but sometimes in reality, you just can't afford something without making payments on it. You know, you may get in an accident and need a new car. You don't have time to save up for a new car, so you may have to finance it. So it's important to understand what your credit is and to make sure that your credit is good and you're putting your best foot forward with your credit. So that being said, as we kind of mentioned, someone who has good credit is going to have a lower score. Now, these percentages are a little skewed, especially if you are going to today's economy, but just for the sake of math, we're going to say someone who has good credit might have a lower percentage that they are having to pay. So we'll say 6% interest. They're going to have a payment of $387 a month. And over the course of the time that they are paying back that $20,000 that they used to buy this used car that they bought, they're going to pay a little over $3,200 back to the bank in interest. Whereas someone with bad credit will say here 10%. I will say the caveat that I have seen way higher percentages than this, 20, 30, sometimes more than that percent interest for people with bad credit. But for the sake of math, we'll say 10% interest. they're going to pay $425 a month. So they're paying more per month for that same time period of financing. And you're going to have $20,000. You're going to end up paying $5,500 in interest over the course of that period of time. So you're going to end up paying more in interest. You're going to end up paying more every single month that you're going to have to pull out of your budget. And it ends up just not being a good deal. So it is important to make sure that you're aware of what your credit score is, because the better the credit score, the more likely you can get a better interest rate. Even in an economy like we have right now, where interest rates are kind of high still, you're still, if you have a good credit score, going to get a lower interest rate than someone who has bad credit. Also, things that are really important, your job, especially your credit report, okay? And that's part of why what we're talking about today is so important, because a lot of jobs pull your credit report. My partner just got a job at a bank. He switched careers, and he ended up having to have his credit report pulled. And so we had to make sure before he applied for this job that we checked his credit to make sure there wasn't anything weird. There was no other, incorrect information and things. And so they could look at his information. Why? Because while that you won't necessarily lose a job offer because you have bad credit, it can tell your employers whether you are a responsible human or not, and someone that they would want to have in their employ, that you pay your bills when you're supposed to, you get your job done, you communicate and make payment plans when you can't make things, especially if you're going into a field like business or finance, things where they have to trust you with other people's information. Also, interest rates. A lot of people aren't aware that your credit score can affect your insurance rates, because it tells the insurance company, just like it would tell a lender, what kind of risk you possess. So very, very important to make sure that you're keeping an eye on these things, right? All right, so how do you go about pulling it? You're like, okay, Sarah, you've told us this is so important. Well, how do we check it? All right, well, you're going to go to annualcreditreport.com. And I'm going to repeat that again, annualcreditreport.com. Reason being annualcreditreport.com is because there are other ones out there, the freecreditreport.com, some other ones that claim to be free and allow you to pull your credit for free when they actually don't. They may let you have it for free, but with a subscription of some sort that you have to pay for. So annualcreditreport.com will allow you to pull your credit from all three bureaus for free once every 12 months. So you can go in once a year, pull all three and check them, or I know someone who goes in every 4 months and pulls one of them. So she'll pull Experian in June. 4 months later, she will pull TransUnion. 4 months after that, she will pull Equifax. And then 4 months after that, she will pull Experian again, to make sure that she is constantly monitoring her credit. So it really just depends on you. But once every 12 months, they will allow you to check it. So you'll go to annualcreditreport.com. You will put in all of your information, right? It's going to ask for your name, your address. If you haven't lived in your address for very long, it may ask for past addresses. It's going to ask your social security number. It's going to ask for a few other things. And then it's going to ask you a bunch of questions that only you should know about your finances. For example, one of mine is usually, we see you bought a house at this address in 2010. What was the address, or what was the bank that you initially took the loan out with? Or they could say you took out a mortgage with this bank in this year. What was the address of that? And something you would know that somebody else may not know. This is to do just a double layer of verification to make sure that you are the person that you say you are, and it's not someone else who's trying to pull your credit report. All right, once you've gotten through that and it has allowed you to pull your credit, you're going to see several things, right? You're going to see your personal information. It's going to give you your name, any former names. It's going to give you your birth date, your social, addresses you've lived at, past employers. It's also going to give you a summary of how long you've had credit, your credit age. It's going to show any accounts you have closed and open, as well as it'll show you any collections or liens, bankruptcies, things like that that you may have. Right? So let's break it down individually, the things that you're seeing on here. Okay. So we mentioned the first thing that you're going to see is your personal information. Don't overlook this. Don't just assume that it is correct. Make sure that you are looking. Note any misspellings. Understand, you will see if you have nicknames or aliases. You know, if your name is Jonathan and you go by John, like you may see that on there because it signifies that you're the same person. As well as if you've been married before, you may see your married name as well as your maiden name. If you've been married a couple of times, you will probably see all of those names that you have gone by on that report. Pay close attention to this. Make sure that the spellings are correct. Make sure that the names are correct. Make sure that you pay close attention to any addresses you don't recognize. This could be your first clue that someone has utilized your credit for not great reasons, is if there is an address that you have never lived at that's attached to your credit report. So, and we'll talk here in a little bit, if any of this information is wrong, how you go about disputing it. Okay, once you've gone through all of your personal information, you're going to see your account information or what's called your trade lines. Now, there's a couple different things that you'll see. This is a general example. It may look a little bit different depending on which agency you're looking at. It's going to tell you the date that it was open. It is going to tell you the responsibility, whether it was an individual account that just you were responsible for, or if it was a joint account. If you opened an account with a parent or with a spouse, you may see that this is a joint account. It's also going to tell you the type of account. So if it's a revolving account, like a credit card, or if it was an installment account, like a car loan or a mortgage, it's also going to tell you, was it a credit card? Was it a loan? Was it a mortgage? Was it a student loan? And then it's going to show you your pay status. It's going to show you if it is paid currently, if it has ever been 30, 60, 90 days late, if it has been put into collections, if it's been repossessed, if you have, say, like a car repossession. And it's going to show you the terms, right? It's going to show you that it is was due monthly, you've paid monthly, you haven't paid monthly. And you'll see here, there's what's called a ratings key. You'll also see this, and this tells you kind of what the different symbols mean. As you can see, the green saying okay generally means, okay, they've paid it, it's current. Yellow, 30 days late, 60 days late. They've even got collections. You voluntarily surrendered something, some sort of property. It's been repossessed or charged off, or you had a foreclosure. Generally, these are a little bit different depending on which bureau you're looking at. So make sure that you look at that. It will have a key with your credit report when you pull it. It will also then have these individual accounts, and it's going to have every single account that you've ever had. Generally, it will keep 2 to 7 years worth of information. And it's going to show your accounts that are open and your accounts that are closed. You want to make sure that you first check your open accounts and look very closely. It's going to show you who the account is, when it was open, what the responsibility was. And then it's going to look something like this, where it shows the current balance, any amount that was past due, whether you have paid it on time or not. And that is all there for you. Okay, it is also going to keep track of your hard and soft inquiries. What are those? I will explain. Hard inquiries are when you go in and apply for credit. So you are at the mall, you're at, some store, and they're like, hey, would you like to get one of our credit cards? You get a discount today. When you physically apply, you put in your social security number, you put in your information, you apply for that card. Whether you get approved or not, that is considered a hard inquiry. Okay. It is you giving permission for whoever that lender is to pull your credit so they can make a determination of whether they're going to allow you to get that credit card, mortgage, loan, whatever. Right. It is very important to make sure that you are keeping these to a minimum. What it tells lenders and things is that you may shop for credit if you have too many. Now, if you're going in, and in 1 week you have several, all from car companies because you are searching for a new car, those generally only count as one when lenders look at them, because it is obvious that you applied 5 times for different car loans at different lenders, and then you have a car loan that opened very closely. So clearly they can see you were looking around for the best rate. You got the best rate, you took out the loan, and now you're paying on the loan. Whereas if you have a credit card here, 3 months later, you got another credit card, you got this loan or that loan, it's going to look negatively because it looks like you're shopping around to get credit and not necessarily using credit wisely. It counts as a negative item. As I mentioned, we talked about credit scores. The more hard inquiries you have, the more it can drop your credit score. Even though it's a very small percentage of that overall number, it can affect it. Depending on how many you have, each one can lower your credit score between 1 and 5 points. And it does require your consent. So those pre-approved offers you might get, those are what's called a soft inquiry. I'll talk about that here in a second. So those are a little bit different. Then there are what we call soft inquiries. When you check your own credit, it's called a soft inquiry. Those pre-approved offers that you didn't actually give your consent for, technically, where they're just looking basically. This can also come with your background checks. Whenever your employers pull your background check, it will be a soft inquiry. So if you go to apply for a job and they ask you to be able to look at your credit report, it will be a soft inquiry. It's not going to hurt your credit. But it shouldn't lower your credit score. And it doesn't actually require your consent, which is why those pre-approved offers are a thing. And you'll see both of those on there. It'll also show any public records or collections. So if you have filed bankruptcy, Chapter 7 or Chapter 13, doesn't matter, either one, it will stay on between 7 to 10 years, depending on what it is. And then any collections that are on the accounts, so anything past due that has been turned into a collection agency. So you have a really big hospital bill that you didn't pay, and it has been turned over to collections. Eventually, it will end up on your credit report. Now, there has been some new legislation that's come out to where this doesn't happen right away for like hospital bills and things like that, but it can still. So it's important to make sure that you talk to those people that you owe money to before it goes to collections. It can seriously damage your credit score, and it looks bad because it looks like you don't pay the things that you are obligated to pay. So how long should these things stay, right? Late payments, they're probably going to stay on there for 7 years, because that account, unless you close the account, is going to stay on there for 7 years. Charge-offs, if you had, say, a bank account that you were negative for a long time and they wrote off your account and charged it off, that is going to stay on your credit for a while. Foreclosures, 7 years. Hard inquiries only stay on for 2. So if you have been one of those people who is always looking for new credit, just have faith. 2 years, stop what you're doing, and within 2 years, those should fall off. Collections can stay on for 7 years. Bankruptcies, depending on the type, will stay on between 7 and 10. If you've been evicted, it can stay on between 5 and 7 years. Any kind of tax liens or different judgments that you've been required to pay can also stay between 5 and 7 years. All right, the next part, and this is the most important, okay? Now we know what's on our credit report, right? Now, 1 in 5 Americans can have errors on their credit report. The very first time I pulled my credit report, I was actually amazed because there was a lot of things that were messed up. I've been married previously, and while you wouldn't think that my married last name was very hard to spell, there was at least 4 different spellings on my credit report when I pulled it, none of which were correct. as well as my last name, Lorenzen, can have lots of misspellings. And so there were several of those on there. There also can be accounts there. I found collections that I paid off that were supposed to be removed that weren't removed from my credit report. So it is important to be able to dispute those things if there's an issue. So we've pulled our credit report, we've gone line by line and looked and made sure that everything is correct, right? We made sure that all of those collections are things that we haven't actually paid, right? Or we haven't actually talked to the bureau and somehow gotten those to go away. All of our credit cards, made sure that those are correct, make sure all of the accounts are ours and not somebody else's. If you find that information, the next step is to dispute it. Now, there are a couple of ways to do this. All of the bureaus have options to do this online, but we're going to walk through the old school with a letter way to do this. And then I'll give you the links to be able to do it online. You can definitely try it online, but if for some reason the online process does not work, it is good to know how to do this the old school, write a letter way, so you have a paper trail if you need to fight a company to get something off of your credit report that's not supposed to be on there. So first, make sure that you're disputing with the right credit bureau. If it appears on your Equifax report, you don't want to contact Experian, right? They're not going to be able to help you. So make sure that you have the right bureau. On your report, there will be a section that has, here is how you contact this bureau to dispute information. So make sure that you're looking for that on whatever credit report it is. Highlight that information that's wrong on your paper credit report, right? You're going to want to send a letter to the credit bureau saying that it is wrong. The FTC actually has a template, and I've got the link in here in a couple of slides, that will help you fill in the information that you need so you can write this letter. Send it via certified mail in the post office. Why? Because then you have receipts that it was received by the company. So that's important. Make sure that you're doing that. Include your documentation and keep documentation. So make sure that you make copies of everything that you're sending and keep it for yourself. But make sure that you include the documentation with your letter saying, I see that XYZ line item is wrong. Include that paper that you highlighted what is wrong. All right, and make sure that you keep those. Send that letter to the lender with your certified mail. If you've never sent certified mail, if you're not sure what certified mail is, when you go to your post office, it costs a little bit extra to send, but what they will do is they will essentially put a receipt on it that once it is delivered, they will return the receipt back to you. And that is your paper proof that it has physically been delivered to the place that you asked for it to be delivered to. Also, it's important to make sure you don't admit fault. They don't really care about the story, right? You don't need to say, oh, well, this happened because I ended up in the ER because of this or that or whatever. Stick to the facts. The facts is it's wrong. I paid this medical bill. It was supposed to be removed from my credit report. It was never supposed to be on there. Please remove it. And there's more information on this. I got this from credittakeoff.com. I have that link up there so you can actually go and look at this full article that gives you this step-by-step that we discussed. If you want to file a dispute online, these are for the dispute lines for the 3 credit bureaus, right? Again, for those of you who have not been on here before, within about a week, I will send out the recording of this webinar as well as these slides. So don't stress if you don't get a chance to write all of this down. All of these will be provided to you afterwards, so you'll have them for later. Also, you can Google at Experian dispute, TransUnion dispute, if needed. Okay, and then this is that template I talked about. So your date, your name, address, subject, disputing information on my credit report, and then it gives you exactly what it needs. This item from ABC Hospital is inaccurate because I paid this with them. This was never supposed to end up on my credit report. I'm requesting that you remove this item and then talk about anything else that you are disputing and include that documentation. right? This is the link to the FTC where you can actually get this template. And you can utilize this to help you put your letter together so you know what it needs to say. So I've already gone over some of this, but let's go through it again. When you're filing a dispute with the credit bureau, be sure you send that letter certified mail. It gives you legally recognized proof that they received that letter that you sent. Include that copy of your credit report. Include any other supporting documentation. So if it is, say, a collections from a hospital, make sure that you include that receipt if you've got it. You can even contact the hospital if you need to and get a receipt from that transaction. So you can include it with that as documentation that it was taken care of, or court documents if necessary. They are required by law to investigate any requests for deletion that they get, okay? They have to investigate it. So if they're unable to verify that that negative item is true and accurate, they have to delete it. Legally, they have to delete it, right? But they have 30 days in which to respond to your request from the time of receipt. So if you've had to send it the old school way, you have to give them that period of time, right? In their response to you, they will respond to you within that 30-day period. It will state either if they have deleted that item or if they found it to be accurate. Okay, so if they went and they verified it with that hospital and said, well, no, actually, you still owe it, here is what our findings have found. And then if you're like, well, what happens if it's still inaccurate and the lender is saying that it's not, or the lender is saying that it's accurate? Then you can file a dispute with the lender. And it is the same process. Write the letter. Here's the template. Write that letter, send it certified mail to the hospital so you have a paper trail, and request for them to delete it. Right? The lender is legally obligated to respond to that letter within 30 to 45 days. Right? Just like in the other letter, don't admit fault or guilt. Don't give them your story or the story surrounding it. Just give them the facts. This was paid on X date. Here is my receipt. You need to remove this off of my credit report. Just like with the credit bureau, if they can't or won't prove it, that it is a valid debt, they have to remove it off of your credit report. Right? They will send you a letter back stating that it is accurate or not. If they say that it is valid and you still think it is not, you have a couple of options. The first is you can contact the credit bureau again, and you can ask them to add a statement in your file describing your side of the dispute. For example, this has been paid, on X date, or this was written off, or this was this, or this was that. And that way, if a lender pulls your credit and they see that negative item, they also have your side of the story at that point. Or if you think it is something that you have been wronged, you can file a complaint with the Consumer Financial Protection Board, or the CFPB. You can file this if, say, like, your dispute took too long. You were supposed to be done in 30 days. It's been 60. You haven't heard anything. Or if it is an error, it is a valid error, and it is still on your credit report, even though you have followed all of these legal steps that you were supposed to in order to get it disputed, you can contact the CFPB and file a complaint, and then they will take over looking at it from there. All right, y'all. So that is everything you need to know about your credit report. Here are some great resources I hope will help you to sort of further figure this out when it comes to your credit report. Our OklahomaMoneyMatters.org website has lots of information about all things money. There is that website again, annualcreditreport.com, as well as the 3 credit bureaus. If you are struggling with debt, you're trying to clean up your credit report and get these things under control, here are some resources for you. There is GreenPath Financial Wellness. which used to be called the Consumer Credit Counselors of Central Oklahoma. They are part of the National Federation of Credit Counselors, and they can help you come up with a plan to pay your debts. They can help negotiate on your behalf. They are a nonprofit. I stress that because there are several companies out there who promise debt relief and promise to do this, but they charge an exorbitant amount of money to do that. So my personal advice, something I personally would do, is to contact the nonprofit first, to make sure, don't respond to like an ad on Facebook. Go seek out GreenPath. If GreenPath is not available in your area, because I know that this webinar reaches the whole state of Oklahoma, you can go to nfcc.org, the National Federation of Credit Counselors, put in your zip code, and it will show you who your credit counselor is for that area. It will match you with someone in your area who can help you. I have several friends who have personally used this to get themselves out of debt, and helped tremendously. Also, our friends at Tinker Federal Credit Union pay a different nonprofit called Balance Financial Fitness to provide financial counseling. Now, the great thing about this is generally you have to be a member of a credit union to use these types of services, but Tinker pays for it, so you don't actually have to be a Tinker Federal Credit Union member to use it. So you can go and you can utilize that. As well as one of my personal favorite financial bloggers is called The Budgetnista. Her name is Tiffany Alache, and she is wonderful. And she has lots of information on her website, as well as on in her books that she has provided on getting out of debt, understanding your credit report, what that means. Very easy and easy to break down. So you can do a lot more research on this. That being said, we've got a little bit of extra time. So if you have questions, because I know that was a lot of information I just dumped on you, please go ahead and in the chat, throw your questions out there so we can answer them for you. And if you do have to jump off, this is my contact information. If you have questions that are general in nature, things you didn't understand, but you don't necessarily want to ask in front of the entire group, please feel free to send me an email. I will be happy to point you to a resource who can help you figure out whatever that issue is. All right. Don't be shy. What questions do y'all have? All right, Jeremy, that's a great question. I'm glad you brought that up. Jeremy said, is it a good idea to become an authorized user on someone's credit card account? That is going to depend. And I know that's not the answer that you wanted, but really it depends. When you become an authorized user on someone else's credit card, you then become, it goes on your credit as well. So if that person does not have the greatest credit history, you don't want that linked to your credit. Now, if you have someone who is very responsible and is adding you as an authorized user in order to help build your credit, yes, that can be a good way, especially for people who are under 18, who are just straight out of school. It can be a really good way to start building the age of your credit as well as your payment history. But again, my caution is make sure that if you are going to be added as an authorized user, or you are going to add someone as an authorized user, that you are, one, making sure that if you're actually giving them the card, that they can be responsible with it. But if you're not, if you're just adding them so they can utilize your payment history, make sure that you yourself have a good payment history, are paying all of your bills on time, don't have a crazy high credit utilization, because you could actually do more damage than good by adding them as an authorized user. I hope that answers your question. What other questions do y'all have? It doesn't look like I have many, so I'm going to go ahead and stop the recording, but I am still here if you guys have questions. So if you're typing, please feel free to keep typing.